Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 30th, 2025, we're tackling Meta Platforms, symbol Meta, a stock currently sitting at a pivotal price point ahead of its highly anticipated Q2 earnings report. Let's begin by setting the stage with the latest news, as reported this morning. Analysts are projecting strong numbers for Meta's Q2, expecting earnings per share of $5.88 and sales of $44.8 billion, a robust 15% year-over-year increase, primarily fueled by digital advertising. This optimistic sentiment is echoed by a significant portion of analysts who rate Meta as a buy. However, it's not all clear skies. Meta's substantial investments in AI initiatives are a major focus, as are its capital expenditure plans, which could impact short-term profitability. Additionally, an ongoing Italian antitrust investigation regarding Meta's AI integration in WhatsApp introduces a layer of regulatory uncertainty. The market is already anticipating significant volatility post-earnings, as indicated by increased options market activity. Now, let's turn our attention to the daily chart to see how these narratives are playing out in price action. As you can see, Meta reached an all-time high of $747.90 on June 30th, 2025, marking a significant peak in its recent rally. However, since that high, the stock has been in a clear pullback, shedding considerable value. Yesterday, July 29, 2025, saw a critical development as Meta's price fell below its 21-day moving average, a technical indicator often watched for short-term trend reversals. The closing price on July 29 was exactly $700, which is a major psychological and technical level. This $700 level acted as a strong support zone in earlier periods, and its ability to hold or break will be crucial after today's earnings. High volume during this recent decline suggests strong selling pressure, which is a concern for bullish traders. We're looking at significant price swings, reminiscent of the substantial gap down we saw in April 2024 after their Q1 earnings, which wiped out a large portion of gains overnight. Zooming into the 15-minute chart for July 29th, we can observe the acute nature of yesterday's sell-off. The stock experienced a sharp drop in the late trading hours, pushing it decisively towards the $700 mark. Specifically, the candle at 1950 Universal Time Coordinated showed a dramatic move, hitting a low of $699.91 before closing at $700.92, indicating that the $700 line was breached even if only briefly. The elevated volume accompanying this specific candle confirms the intensity of the selling pressure as the market positioned itself ahead of the earnings call. This rapid descent highlights the nervousness among investors, despite the generally optimistic analyst expectations. Following that sharp drop, the final hours of trading on July 29th saw Meta attempt to consolidate around the $700 level, as seen on this 15-minute view. The candles show a tighter trading range, with attempts to bounce back slightly but ultimately holding near the $700 resistance for the remainder of the trading day. Pre-market trading today, July 30th, shows the stock opening slightly higher at $708, but still within the day's range of $699.60 to $708.50, reflecting immediate uncertainty. This modest pre-market strength could be a brief consolidation or a very early attempt at recovery ahead of the earnings announcement. For short-term traders, the area immediately above $700, specifically around $708 to $710, will be a key resistance to watch for a potential breakout. Looking at the bigger picture on the daily chart, let's discuss the fundamental arguments for both bullish and bearish outlooks for Meta. Reasons to be bullish include the strong Q2 earnings expectations, with ad sales as a primary growth driver, signaling strength in Meta's core business. Analysts' overall buy sentiment, coupled with Meta's aggressive push into AI, could also be significant long-term tailwinds if these initiatives prove successful. If Meta delivers a strong beat on EPS and revenue, coupled with positive guidance and clear plans for AI monetization, we could see a powerful reversal and a retest of the $747.90 all-time high. On the bearish side, the recent pullback from record highs suggests underlying skepticism, perhaps due to the ongoing heavy capital expenditures on AI. The Italian antitrust investigation represents a regulatory overhang that could impact future strategies and profitability, particularly concerning WhatsApp's AI features. Furthermore, if Meta misses earnings expectations or provides weak guidance, especially concerning the digital advertising market, the stock could see a significant gap down, similar to past earnings reactions. The stock falling below its 21-day moving average also indicates a loss of short-term momentum, which could accelerate selling if earnings disappoint. The mixed sentiment in the broader digital advertising market also adds to the uncertainty, as Meta's performance is often seen as a bellwether for the sector. In summary, the key price levels to watch are the immediate psychological support at $700. A sustained break below $700 could see the price drop towards the $680 region, which has offered support in earlier trading periods. Further downside targets would be around $650 to $660, a level that has served as a floor multiple times in recent months. On the upside, the immediate resistance is around $720 to $725, the previous day's high. Breaking above this would set sights on the all-time high of $747.90, which now acts as a strong resistance level. For short-term traders, the post-earnings volatility means waiting for the initial reaction to settle is paramount before taking a directional stance. Consider the volume accompanying the initial moves. High volume on a strong breakout or breakdown reinforces the trend's likelihood. Long-term investors should watch for clarity on Meta's AI strategy and its financial impact, as well as any developments in the antitrust probe. A bullish scenario, with a retest of $747.90 or new highs, has a 40% likelihood, reinforced by a strong earnings beat and positive forward guidance on AI. A bearish scenario, with a break below $700 and potential move towards $680 or even lower, has a 60% likelihood, especially if earnings disappoint or if the AI investments show no clear immediate return. Keep an eye on the digital advertising market commentary from management, as this remains the bedrock of their revenue. Remember, trading on earnings is high risk, and managing your risk exposure is essential. Thank you for joining us on Explain the Charts, and may your trades be profitable.